Welcome to the Silver Bullet backtesting session. Today, we are going to dive deep into a powerful strategy that can potentially transform your trading approach. Whether you're a beginner or an experienced trader, this session is designed to sharpen your skills and help you achieve more precision in your trades. We'll be following a systematic approach, breaking down key time frames and focusing on the nuances that often go unnoticed by many traders. So, get ready, take notes, and let's start backtesting with the Silver Bullet strategy. Here's what we'll cover. Step 1. The first and most crucial step is identifying the 9 a.m. hourly candle. This candle serves as a critical reference point for understanding how the market may behave throughout the session. By analyzing this hourly mark, we set the stage for making informed decisions as we move into more granular time frames. Step 2. After marking the 9 a.m. candle, the next step is to zoom into the 1-minute chart. This chart allows us to see the price movements in a more detailed manner. At this point, we will start observing smaller fluctuations that help us pinpoint precise entry and exit points, as well as analyze market behavior in real time. Step 3. Once we are in the 1-minute time frame, the key period to concentrate on is between 10 a.m. and 11 a.m. This is often a crucial time in the market, where liquidity and volume tend to increase. This hour typically brings the most significant price actions and can offer potential trade opportunities if you're able to anticipate market movements effectively. Step 4. Wait for a market structure shift, MSS, or a change in state of delivery, CSD. Patience is essential here. Don't rush into a trade. What we're waiting for is a shift in market structure or a clear change in the state of delivery. Recognizing these changes is critical as they provide clues about the market's next move, whether it's gearing up for a bullish breakout or a bearish reversal. Step 5. Finally, once you've identified the trade opportunity, it's crucial to manage risk properly. Set your stop loss just above or below the swing that created the change in state of delivery, CSD. This not only protects you from unnecessary losses, but also ensures you're positioned to capture the best possible reward-to-risk ratio. By following these steps meticulously, you'll be better equipped to understand the rhythm of the market, improve your timing, and enhance your trading strategy with more confidence. The Silver Bullet approach requires practice and patience, but with consistent backtesting, you'll begin to see how these principles can sharpen your trading edge. Let's get started and make the most out of this session. Stay focused and remember, it's not just about winning every trade, it's about learning, improving, and evolving as a trader. Alright, without wasting any more time, let's dive straight into the charts and see how the Silver Bullet strategy works in real time. We've already covered the key points, and now it's time to put theory into practice. We'll be looking at live market examples to see how we can identify the 9 a.m. hourly candle, shift to the 1-minute chart, and then focus on that crucial 10 a.m. to 11 a.m. time window. By analyzing these live charts, you'll witness exactly how market structure shifts and how we spot those key moments to place our trades. So, let's head over to the charts and see how it all unfolds in real market conditions. In our first example, we have EURUSD hourly chart, and as you can see, the 9 a.m. hourly candle has already closed. We will mark its high and low as our Silver Bullet range. So, we've marked the high and low, and you can see EURUSD is in bearish trend. There's also an FVG, fair value gap, overlapping with the 9 a.m. candle, so let's mark that as well. I'm expecting the high of the 9 a.m. candle to be swept, and for the price to rebalance this fair value gap, which could give us a good sell trade opportunity. Now let's switch to the 1-minute chart and see how this setup plays out. Alright guys, we are now on the 1-minute chart. Here, the high and low of the 9 a.m. candle, along with the fair value gap, are marked. We will wait for the price to break either side of the range, and after confirmation, we'll take an entry. Let's see how it plays out. Okay, you can see that the price has swept the high of the recent 9 a.m. candle and tapped into the fair value gap. Now we'll wait for confirmation before taking a sell trade. Let's see what happens next. As you can see here, the price has shown a displacement to the downside and has created a change in the state of delivery, along with a high probability order block. Let's mark that. You may have also noticed that the price has created a bearish fair value gap at the same time, so let's mark that as well. Now we will open our short trade here, and our stop loss will be placed just above the order block. Let's see what the market does next. As you can see, the price has tapped into both the FVG and OB and has respected both PD arrays. Let's see what happens next. Here you can see that the price has recently shifted the market structure and created a significant fair value gap. For those familiar with the ICT 2022 model, you will understand this setup. We'll open another trade from here and target the opposing end of the range. Let's see what happens next. You can see that the price has retraced into our marked fair value gap, and our second trade is now active. Let's see how the price behaves further. And here we go. Our final target has been hit, and the price has offered a 5+ RR trade. So, let's move on to our next example. Here we have the New Zealand dollar to United States dollar hourly chart, and as you can see, the 9 a.m. hourly candle has closed, so we'll mark its high and low. Now that we've marked the high and low of the range, we'll switch to a lower time frame for entry. We've shifted to the 1-minute chart, and the 9 a.m. range is already marked. We'll wait for the price to take over one side of the range before we make a trade, but only after confirmation. So, let's see how this works. You can see that the price has swept the high and shown downside displacement. The previous fair value gap wasn't respected, and the price closed below it. In this case, we'll use the inversion entry model, so let's mark that out. We've now marked the inversion fair value gap, and we'll enter the trade from here. Our stop loss will be placed just above this swing, and we'll target the other end of the range. Let's see what happens. You can see that the price has tapped into our zone and shown a willingness to move down, so let's see how it plays out. And here we go. The price has hit our final target, offering a very high risk-to-reward ratio. This is the power of the silver bullet strategy. Believe me guys, this is a highly accurate trading strategy. Go to your charts and backtest it. In our third example, we have the GBP/USD 1-hour chart, and the 9 a.m. candle has printed. So we'll mark its high and low, which will be our silver bullet range. Now that it's marked, let's switch to the 1-minute time frame to look for our entry model if it occurs. Alright guys, we've switched to the 1-minute time frame, and both ranges are already marked. Now let's see what the price does. You can see that the price has swept the low of the range and shown upside displacement. The market structure has shifted, and the price has created a fair value gap. Here you can see that the price has actually created two fair value gaps, but we'll focus on the one in the discount area. We've marked the fair value gap, and from here, we'll open our long position. Our stop loss will be placed just below the swing point, and we'll target the high of the range. Let's see how this plays out. You can see that the price has retraced to our marked level, respected the fair value gap, and shown rejection. So, let's see what happens next. As you can see, the price has moved upward, but then made a deep retracement, and we've been stopped out. However, after offering a 2R plus move, the stop loss was hit. Now the price has taken the liquidity of the previous low and shown rejection. Let's wait and see what happens next. If another opportunity arises, we'll enter again. The price has once again swept the sell side and shown upside displacement, along with another market structure shift. So, we'll mark that level. We'll also mark this breaker. Remember one thing, guys. If there is a breaker just above or below an FVG, the price often doesn't retrace all the way to the FVG. Make a note of that. We've marked the breaker, and from here, we'll open another long position. Let's see what happens next. As you can see, the price has tapped into our breaker and shown upward displacement. Let's watch and see what the market does next. And here we go. The price has finally hit our target, offering a very high R to R trade. Let's move on to our last and final example. Here, we have the 1-hour chart of gold. The 9 a.m. candle has already printed, so we'll mark its high and low as our range. Now let's switch to a lower time frame. Alright guys, we've moved to the 1-minute time frame. Let's see what the price does next. The price has recently swept the high of the range, shown downside displacement, and shifted the market structure. It has also created a fair value gap, so let's mark it. And from here, we'll enter our trade. Let's see what happens next. You can see that the price has tapped into our zone and made a downside move. The market is now consolidating a bit. Let's see what happens next. The price is hovering around a certain level. Let's see what happens next. The price has finally hit our 50% level. Let's see what happens next. Suddenly, the price has made an upside move and cleared all the buy-side liquidity. Let's see what happens next. After cleaning the buy-side liquidity, the price has made a strong downside move and gone all the way down, hitting our final target. As we've seen through these examples, the silver bullet strategy is a highly accurate, high-winning method that offers excellent risk-to-reward ratios. It's simple, effective, and works across all asset classes, whether it's forex, commodities like gold, or even indices. If you want more valuable content like this, don't forget to subscribe, like, and share this video. And for even more insights and live discussions, make sure to join my Telegram group. The link is in the channel bio. Thanks for watching, and I'll see you in the next video.